Hello traders and welcome to another video review. Today is Friday, March 11th, 2022. Let's start with the Forex calendar review. Some data had been published overnight, but they are not that much important. The much more important data were published from UK. As you can see, we got the GDP, industrial production, manufacturing production, construction output, index of services, manufacturing production data from the UK. Most of them, as far as I can see, had beat the expectations. So very good data from the UK economy. We are going to take a look at the British pound to Japanese yen next. Data from the Germany in form of the CPI and harmonized CPI had been in line with the expectations, 0.9% CPI from Germany. We are still waiting for the data from UK consumer inflation expectations for the first quarter and data from Italy quarterly unimportant unemployment rate. Kind of unimportant data as well, because it looks like that this unemployment might be decreasing from 9.2% to 9% in Italy. The key event of today is the unemployment rate and employment change data from Canada, together with part-time employment change and participation rate. All of this data are scheduled for release at 2:30, and the unemployment rate is expected to drop from 6.5% to 6.3%. The last data for today are University of Michigan inflation expectations from the US, and at 7 p.m. sharp, Barker Hughes US recount from the US as well. So I think we should take a look at the British pound for sure, and then of course for some Canadian dollar pairs to see what is going on there. So let's start with the British pound to Japanese yen. Daily time frame chart of the British pound to Japanese yen is right now going down because we are below this ascending channel, and after the low at the level of 151 was made, the bounce was capped at the lower channel line and at the right now the supply zone, which consists of the level of 152.82, 152.74 and 152.58. So this is the supply zone. It looks like the bulls are trying to break through this zone. If they fail, the market will likely test the lows of 151. However, due to the chances of a breakout towards the neutral level on the RSI is still negative, but we might try to bounce a little bit. Next target is 152.82, then 152.09. If this level is violated, I think we might add some sort of the Fibonacci retracement tool, and to see where is the 38% retracement. There you go, 153.65. The bounce might be capped there. It will be in three waves, A, B and C, and the market is ready to continue lower. So the British pound to Japanese yen looks like the bearish pressure is high, momentum is negative, momentum is kind of it's not that weak, so, which is why we are seeing some sort of the bounce possibility. However, the bears are still in control of the market and might even push this market lower towards 149.2, 147.91 demand zone, marked on the chart as this very big green rectangle. So that's everything about British pound to Japanese yen. Let's take a look at the Canadian dollar. Daily time frame chart of the Canadian dollar looks like nothing happened. Nothing happened, because what is going on here? We got a consolidation zone between the 1.2812, 1.2647. This consolidation zone was broken out from the upside, and then market reversed, then from the downside, and then the market reversed, made a new local high, but it was capped right on the 1.2896 technical resistance as well. Bearish engulfing pattern was made here, so that reversal from the lows at 1.2586 was purely cosmetic. So this market still doesn't know where it wants to go. It just breaks, it makes false breakout to the upside, false breakout to the downside, false breakout to the upside again with the higher high. Then we have bearish engulfing pattern. Looks pretty obvious to me that we are now going back to the consolidation zone. Right now we might extend this consolidation zone a little bit wider because we still don't know what is the market plan. So the consolidation zone will be now sorted between the lower levels of the 1.2634, and there is one point, let's say this zone here, 1.2586. So that's the lows of the support, and of course the upper zone is 1.2875, 1.2896. However, this is 1.29 basically. Okay, 1.29. There you go. This is the highest zone, and now this zone is wider. It's because of many false breakouts on this pair, which is why this zone has been widening. So this is how it looks like on the US dollar to the Canadian dollar right now. So if we talk about the Canadian dollar, we must take a look at the other pair related to the Canadian dollar, which is crude oil. The other commodity, of course, it's not a forex pair. So what shall we expect right now? We got 5 wave advance completed. Wave A to the downside looks like it is completed as well. Let me just zoom in so you can see higher. We are now in the corrective cycle. Inside bar here yesterday. Today the market tries to rally, however it might not be that obvious. As you can see, the wave C is still waiting for the development to the downside. The first target might be at 95.89 level. This is of course $95 per barrel. We will see how this will play out. The RSI is approaching the level of 50. The level of 50 is the neutral level, so it's very important to keep an eye on this level, because if we break into the negative territory, the sell-off might easily extend towards 88-84 zone, which is the previous zone of the highs of the wave 3 and the lows of the wave 4, which are around the level of $81-82. So that might be kind of an impressive technical correction. And it would also mean that, of course, this 5 wave advance was, let me just take a look and zoom out and take a look. This technical advance was a multi-month technical advance that had completed at 130.44. So this is the high for the wave 5, and now the ABC cycle is completely different cycle than the one that has been pushing the prices higher and higher, even from the lows of the 2021 and 2020, after the shock of the supply shock, when we went towards the almost negative rate. So this rate is 0.44, 0.20 even, right? So 20 cents per barrel. So this advance to 130, okay, let me just put it into the perspective, might be just completed. If the ABC goes lower towards below 100, like 95, 90, 88, this big multi-year, multi-month for sure, but multi-year as well, because it's March 2020. There you go, April, March 2020. This multi-month rally, up movement, up wave, impulsive wave, whatever you call it, had been completed, terminated at 130. So please pay attention to the current situation of the oil, because it looks like we might be entering the bear market. However, of course, due to the geopolitical situation, this might be pretty much very quickly changed, because the emotional reactions of the market participants, of course, what I'm talking about is greed and fear. And last but not least, let's take a look at Bitcoin. Daily time frame chart of Bitcoin is showing the sign of weakness. The signs of weakness are very, very clear right now on this market. I think this might be whoopsie daisy. This might be the best view for this market right now. We have the clear rejection of the lower channel line, clear rejection for the 1, 2, 3, 4, 5, 6 for the seven times the bulls tried to break above 45,000. They failed 7 times, rejected. Then we got this low at 37,159, bounce, very nice bearish engulfing pattern or piercing pattern, whatever, bearish sign of increasing bearish volume, increasing bearish pressure. And if we break, because we got the short-term trend line here, I think that's everyone see right now, this short-term trend line, right? This is what is being played by the day traders and the market participants focus on the short-term gains. This is the first short-term trend line. If we break below the trend line support, then technical support is around the level of $37,000. Of course, if we break below this level, then the next is 34,290, and then of course is only the swing low from the end of the January. So please keep an eye on this market. Momentum is hovering around the level of 50, up and down, up and down. However, bearish pressure is clear on this market. There is every rally, every bounce made by bulls is being capped and reversed, and then again rally, capped and reversed. So the market is kind of a technical right now. It's much more stable than it was like 2 weeks ago, okay? And it starts to be much more technical as well. So please keep an eye on levels, keep an eye on the possible scenarios, keep an eye on the momentum, because if we break lower, the correction to the downside might extend and might be much more dynamic. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.